So, Farhan, you want to talk a little bit about history and practice?
Yeah, exactly. Thank you. So the first major piece that I wanted to start with is the technological advancement in the oil and gas industry. Now everyone is seeing the AI boom. Similarly, things have gotten significantly better over the passage of time in the oil space. And the first thing that I want to talk about is the Permian Basin. It's actually, for context, everyone, it's an area with a significant oil and gas reserve and covers some part of Delaware, Texas, New Mexico. And the benefit is that as it consists of multiple layer of rocks where you could drill oil and gas, and it's very productive for big companies like Chevron to drill over there because it's just the return compared to relative other areas it's just significantly better. And that's just one piece of the puzzle. The other thing is that the technology itself, like we have seen from vertical drilling to horizontal drilling, it's called fracking as well, right? Where you can actually go and put some explosives, there are cracks, and exactly you could, it's one of the best method that I can think of right now that the companies are using to extract and get the more thing out of it. In early 20s, the probability of you drilling, and it's not 100% in today's world as well, but the probability of you drilling and finding an oil was around 40%. And right now it's 80%. It's still not 100, but it has gotten significantly better. So if someone, a fund who's drilling oil and they're doing operation based on a single well, there's a probability that they may not find it. So a diverse solution is helpful. Sorry, good. You want to?
No, I was just going to amplify that. The idea here is that, and we'll get to this in talking about these particular funds and investments, but the idea is that your returns from investing in oil and gas are going to come from two places. They're going to come from tax savings, and they're going to come from the production and sale of the underlying commodity. And so what we're talking about here is essentially why you should be comfortable if you decide to do this, why one might be comfortable with this as an investment. And to your point, Farhan, this is a trajectory thing. These funds were profitable and had a solid return over the last 25 years, even before these advancements in technology, in drilling technology. Now that fracking has become certainly more widespread, and also I think candidly more politically acceptable, right? You remember in the 2010s, there was a moment where fracking was a target of some environmental politicization. And whatever you think about that, we don't do politics here. Whatever you think about the political side, fracking is a very efficient technology. And to Farhan's point, these wells are now much more likely to produce oil or gas, which means that although your investment is in a diversified portfolio of wells, the more of them that produce the commodity, the better for the overall returns. So Farhan, before I turn to policy and 2025, anything else you want to add on technology and
No, I think you've covered it all because at the end of the day, it all boils down to how efficient the funds are and how things have been improved over the passage of time because that's what people look for, right? At the end of the day, we want to make sure that they're performing better and they're giving us the better ROI, right? And no one is, we'll come back to that, but no one is going to put it into writing how much you're going to make because it's a commodity and it's highly volatile. But given that's technology has significantly has gotten better with the passage of time and there's just a lot of advancement, it gives you some level of certainty knowing that there are better odds now compared to where we were in early 20s.
That's right. That's right. To build on top of that technological development and the idea that the American geography, the Permian Basin down in the South and Southwest, is a really profitable place to drill, you add on top of that in the current political and policy moment, there is renewed attention to increasing American oil production and gas production. We have some notes here. The current administration in 2025 has significantly reduced the permitting process, the environmental and local permitting process, reduced the fees that one has to pay in order to get a permit and then to build an oil well. There are several other policy developments, but the idea here is that the administration is committed to increasing oil production, and therefore, and in order to do that, is making it cheaper, less time consuming to do. And so that explains a big part of why, combining with the technology, why even though drilling was profitable in 2015 and 2020, why in 2025 we're seeing a significant uptick in new drilling and overall production. And really is all just atmospherics, right? Ultimately the numbers are the numbers, but we're going to talk about on the non-tax side, but the investment side, what these numbers look like and what you can expect or what you should expect. And those numbers will be bigger now than they were 5 years ago for all of these reasons. Farhan, did you want to say?
Yeah, so I was just gonna say one line about it, and that is that the policy drives a lot of these things, right? Looking at the Inflation Reduction Act, which is driving the renewable energy space, and then looking at this. So the current administration, which seems very favorable towards oil and gas, is going to drive a lot of the market, right, in the upcoming years. And considering the fund's target first couple of years for the cash flow and people getting their money back, I think it's going to be interesting to see, and the wind seems to be favorable towards the space.